Hello, I'm the 3 Money Hits guy. In this video, I'm gonna share with you 13 mental traps that can cost you a lot in your investing career. Don't start investing by yourself without having read everything. Investing in the stock market can be very exciting. You might want to take the plunge before you've taken the time to properly educate yourself on the subject. The stock market can be very dangerous and costly for the untrained person. Don't get started until you've read everything on the subject. Take a full year if necessary to observe the market and make fictitious investments and paper trading. This year of training will be the one that will pay off the most in your career as an investor. Your investing style is very much related to your personality. If you are someone who often takes risks in your life, a go-getter, an entrepreneur, it is likely that you will be more reckless than others in your investment choices. Be aware of this and don't let your audacity guide you exclusively. When we start investing, we are nervous and that's normal. Usually, we don't have patience. We don't want to make bad decisions. Also, we read and heard stories of outstanding performance that we would also like to achieve. We are looking forward to the results. Don't be impatient for quick results. Take a deep breath and don't sell the stocks you just bought right away. If your initial analysis is good, the odds are on your side that the stock price will go up in the medium to long term. If you are investing for the long term, you should not be looking at the daily movement in the price of your stocks every day. However, if you apply this rule, you may find that there is a lack of action in your life as an investor. You can become bored. You can be tempted to make a change to your portfolio just to spice up your activities. Resist this temptation. When considering a business, you may be relying a little too much on your gut feeling. This is a big mistake. The stock market is not a casino. You don't succeed with luck, but rather with hard work. So, do your homework before you buy. Any investment strategy has rules to follow and rigorous tasks to be done at certain times in between. Have the discipline to follow your original plan and the discipline to do any periodic follow-ups necessary to consistently confirm that your businesses are still good to own. It is inevitable that you will make mistakes during your investing career. Everyone does it, and that's what advances you in your knowledge and experience. What matters is not to repeat the same costly mistakes twice. Don't trust your memory to avoid doing them again. Keep a logbook listing your mistakes and check it often. The stock market is made up of over 6,000 public companies, and that's just on the New York Stock Exchange and on the Nasdaq. You may find companies that are working in areas that you didn't even know existed. Exciting, isn't it? But be careful not to go outside your area of expertise. Prefer companies that are in areas that you know relatively well and that you fully understand their business model. Volatility and periodic corrections are inevitable. When one of your stocks collapses quickly, don't panic. Take the time to understand what is affecting the price of your business, its industry, or the entire market. Unless news comes fundamentally changing the future outlook for your businesses, don't sell on the spot. History clearly shows us that it is not the right thing to do in time of crisis, but that too many people still do. You think that you are smart enough to time the market? That you have understood everything? Thinking that you have detected the code of the machine can be very costly. The market is completely unpredictable and you will lose a lot more by waiting in and out at the right time than by staying invested. Studies based on backtesting show that there is more to be lost by avoiding bad days on the stock market than by staying invested to take advantage of better days on the upside. It's possible that one day one of your companies experiences a rapid drop in share price due to a profound change. However, you might insist on not selling it by imagining improbable scenarios just to convince yourself not to sell, so as not to lose. That's another big mistake. Take the loss. You may fall in love with one of your own businesses. In your eyes, its products are too great. Its leader is a real genius. The company's past seems a real success story to you. Nothing can happen to it. Wrong. Everything is possible. Everybody can fail. To convince yourself, all you have to do is look at the great brands from your childhood that no longer exist today. You may get great results in some of your investments. Don't get carried away. Don't think that you have now the magic touch. You must stay humble and continue the good work by acting in a logical and rigorous manner. Remember, you are always one trade away from humility. If you found value in this video, please hit the like button. If you don't want to miss any video, subscribe to the channel. I'm the 3 Money Hits guy. Thanks for listening and keep on learning.